My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at Verified Investing. Now, listen, huge day today. There are major things going on. The jobs report just came out, minus 92,000. It was expected to be plus 50,000. Futures are in free fall, not just because of the bad economic news, but because oil has surged now to $88 a barrel. All right, we talked about this yesterday. We're going to go over the chart. Where am I adding? I actually just added earlier this morning as this move has gone up, inching into a short position. Now, listen, it's Friday. There's going to be a lot of fear out there. The question I have is, will we see the S&P break that key level that I've discussed that is basically the straw that breaks the camel's back on the chart? So there are major events going on. I didn't even mention this other one, which is epic. Western Alliance Bancorp writing off $126 million loan. Essentially, we talked about the private credit crisis, the credit crisis in the underbelly of this economy. It is now showing itself with loan losses being taken by banks. So you have a scenario where you have a weaker economy. You have a scenario where you have higher inflation. We already saw that before this latest oil move because of the PCE data about a week and a half ago, 2 weeks ago, right? Now we're looking at a credit crisis. Again, markets are in turmoil. Be careful here, folks. This could be, again, what triggers a 10% drop in the S&P 500. We'll watch the charts. Let's go into the charts. Speaking of which, take a look. S&P futures, look at this drop on the back of this jobs report. Now, remember, what is the term that we use when you have higher inflation, a weaker economy? Stagflation. I've said it before. I'll say it again. That's, I think, the base case now is stagflation for the economy. One last headline that is a little bit concerning. Oracle plans to lay off thousands of employees. Guess why? AI. Last week, we heard from Block laying off 50% of its employees. AI the culprit. So this is something that's going to create more weakness in the labor market. And then you have higher inflation. It is not a recipe for success. It is a recipe for disaster. All right, so S&P futures are down sharply. We go back to the S&P 500 daily chart. We held once again yesterday right here. Here's that line, right? So watch this line at 67.90. A daily closed below this, and the markets open the trap door potentially to a bigger move down. The only thing, in my opinion, that could save us is if oil starts to come in. If there's some sort of de-escalation in the Middle East that has oil dropping, let's say Sunday night or Monday morning, let's say $10 a barrel, that could possibly save the markets if we close below. Aside from that, this market could be toast. We'll watch for it very closely, and I'll keep you guys appraised of the situation. But again, very key thing. Now, if you take into account where the S&P futures are, let's go back to the ES chart. Are we trading below this key level? The answer is yes, we are. Now, again, we've traded below a few days ago, right? We were below here, we were below here, and by the end of the day, they were able to save the markets. But again, will they be able to save it today? A lot is going to depend on that oil price. If we flip over to oil, look at this. Oil trading near $88 per barrel into my next major resistance level right here. So this was yesterday's resistance. And interestingly enough, look at this. It actually pulled back off of that pierced level. But the continued escalation and uncertainty with the Middle East and the Straits of Hormuz being closed has now triggered another wave going into the weekend. And again, fear is always greatest going into the weekend because you have 2 days where commodities like oil are closed and the stock market is closed. So what do people do? They exit first and ask questions later. And ultimately, again, we can see that push up in oil and holding today unless we get news during the day. And then we'll see what happens on Sunday night into Monday. Now, you'd think gold would be rallying. Not really. And that's also a bearish sign for gold. You think Bitcoin, well, Bitcoin's been generally going with risk assets. And again, that is coming back in. We'll talk about that chart in just a minute. But the key here is oil is at its next key resistance at $88 a barrel. If it breaks that, it has a little bit of resistance at 90 right here. And then the next big one would be $95 a barrel right there. These are some key levels to monitor on the charts of spot crude. Now, flipping back to the NASDAQ's been holding this key level as well. Will we break it? We'll watch closely today. Again, we break this level, I think you trade down to 20,000 on the NASDAQ, which would be about a 10+% drop from current levels. Now, let's flip over to a couple other things. I mentioned that there is issues in the private credit market. We already knew about that weeks ago. These oil headlines and what's been going on with Iran has kind of changed the narrative where we're not talking about it anymore. But today's news, it's kind of being glossed over by the mainstream media, but keep an eye on it. Take a look at Western Alliance Bancorp here, guys. I don't know how many of you guys remember the financial mini crisis that occurred like in 2021, I think it was. But look at this drop here on Western Alliance Bancorp. Closed at 81. It's trading at 71. This is a bank stock, guys. This is a bank stock. These things don't move in this manner. Look at the fall from 97 now to 71 just since early February. Basically 1 month ago, this was trading at $96 to $97. It's now at 71. Again, basically what ended up happening is they had a loan and it's not going to get repaid. They had to take a write-off here, $126 million. Now listen, overall, this is still a profitable bank, but the question is how much rot is in the underbelly, not of this bank alone, but in all of these banks. How many loans, how many write-offs are going to be starting to be talked about and released to the public, to investors? And that's where things can get scary here in the banking sector. So keep an eye on this, guys. We'll also keep an eye on the big banks like JP Morgan, Morgan Stanley, Bank of America, et cetera, Citigroup, and so on, watching those closely. So keep an eye on this. Now, as a trade, would I potentially day trade Western Alliance Bancorp today? Possibly, but very light volume, like light share size. This 68.60 level would be my first level. I might consider another trade down here at 65.40. These would be my two levels that I'd be watching. This is a gap fill. This is a pivot low. But remember, these type of scenarios can get pretty crazy. And so for me, very small share size so that even if it goes against me, I'm not going to take a big loss. If it bounces solidly, great. I get a little bit of money in my pocket for the weekend. All right, so I'll be monitoring those in the Apex Live Day Trading Room. Remember, the link's below if you want to join us and rock and roll today with all this volatility in the market. Okay, going back to various other charts here, we got to talk about Oracle. We'll get back to some of the keys like gold and silver and Bitcoin. Oracle is selling off this morning, but notice how it was actually net positive. This is where it closed yesterday, guys. So it was actually up pre-market on these layoff announcements because it saves the company money. But what's more concerning to me is this trend we're starting to see. Every company, imagine every major company lays off thousands of employees. You know, we saw a minus 92,000 jobs report. What's next month? What's the month after that? Does it go to 100,000 a month? Does it go to 200,000 a month? At what point do we see the unemployment number shoot sharply higher to 5%, to 6%? And with inflation still moving up, this is a problem. This is stagflation. This is a recipe for massive downside. Now, interestingly enough, look at this, guys. We have the VIX. The VIX is spiking this morning with the combination of this data with basically what's going on with the Western Alliance Bank, with what's going on with the oil price. These are all stoking fears here. And you can see the VIX is popping here in the early trading action. And again, it is now trading just below 30 at 27 and change. The VXX, which is something that I trade with members in my service, my swing trade service, new highs of the morning nearing 35. Just to put this in perspective, just a week ago, this was trading at 27. So massive move up. This is my target zone right up here. I think we could easily get there. If not today, early on Monday, if fear persists. You're looking at $40 on the VXX. Now, listen, if headlines come out and we see a calm down in the oil markets, then this comes back in. Remember, the VXX is an inverse indicator for the markets, right? It's fear. So fear goes up, markets go down because of the fear. People are selling, VIX goes up. Okay. Back into some of the charts here, guys. Let's just check back in on oil. Oil is now again back at $88 a barrel, just making a new high of the day. Bitcoin is coming in. Take a look at Bitcoin here. This is a really important level for Bitcoin, just below 69,000. Why? Because look, this was the trend line that we broke out above. Granted, we never confirmed, but still, it still should act as support. If you're a bull on Bitcoin, you want to see this 68.7 level hold on Bitcoin today. This is a really, really big technical level. Monitor that one today. If it closes below, it honestly could head back down to the 62 range, the low end of this parallel. If it holds above, the chart remains solidly bullish overall. Gold today. Look at gold. You'd think all this fear is triggering gold going up. Nope, not happening. This is bearish for gold. Also, the technical chart is bearish. This is a bear flag on gold. Watch out. This is telling me if gold can't rally on a day like today, guys, I mean, think about it logically. Everything. You have inflation issues. You have weak economic issues. You have war in the Middle East that's causing oil to go to $88 a barrel. This is the recipe for a spike higher in gold. And if it's not happening, what does that mean? Think about it. All right. Okay. What else do we have here? Silver. Silver today is same thing, fractionally higher, but look at the bear flag. Was never able to break through this key resistance I gave. Watch for a drop down to about $71 to $70 on silver. And then we'll see if it bounces. Does it go back to the high end, or does it bear flag and break to the downside? All right, so a lot going on here, guys. There are some stocks that I'm going to be actively watching today for trading opportunities, both swing trading and day trading. I'm going to give them to you right now as we go through. First ones here, what do we have? UAL, United Airlines. So the price of oil is obviously causing this to go down, obviously economically as well, maybe less travel. But look at the drop here. Now, listen, I'm not doing this as a longer term trade, right? I mean, if anything, it's a day trade. My first level is going to be around this level here at 88.50 today. And then if it breaks that, there'll be more support around $80. Maybe a quick swing trade, but I'm eyeing Delta Airlines more for the swing trade side. But look at this breakdown too. You had this beautiful trend line we've broken lower. Now, just because it's broken that bigger trend line doesn't mean we can't day trade it. In fact, some of the greatest day trades are there because it's broken and it's flushing. Like a couple days ago, this was $117 a share. It's now $91.75. Percentage-wise, massive drop. But again, day trades, counter trend, major support, quick bounce. I'm in and I'm out with members. And that's the beauty of it there. Delta Airlines trading in at $59 here. I have a gap fill right down here at 50, a pierce of 56. There's also a ton of support here on the chart of Delta right down here. This is my swing trade zone right here for a technical bounce. Now, just like I do with everything inclusive of oil, I don't go all in on my first buy. That's for retail traders that think they're never wrong. I know that it's very hard to pick bottoms and tops. And so what I do is I leg in. Just like yesterday, I said, listen, at 80, pierce of $80, I'm going to start a 1/4 share size or a position on a short on oil. And then at 80, basically 85 to 87 this morning, I added another 1/4 at $90 pierce. I'm going to add another 1/4, just legging in slow and steady. Let the emotion of everyone else take the price up. Once we see the de-escalation, which inevitably will come per my comments yesterday, that don't think President Trump's not watching this like a hawk. Number one, the jobs data is not what he wants to see for the midterms later this year. Number two, higher oil means higher inflation, less the ability for the Fed to cut is much, much less. He's got to bring that oil price down. And so, again, the thought process is that, sure, let oil pop, can go up as high as it wants. But ultimately, by those midterms, you're probably going to see a $60 or $50 price on crude oil. Okay, so keep that on your radar. But this would be my starting point on Delta Airlines. Now, we do have MRVL here. MRVL was up sharply on earnings. It's a chip stock, so actually positive for the chips, although most chips are down because of the overall debacle in the market. But you can even see MRVL has already fallen back here quite a bit. We look at the daily chart. You can see even when it was at its highs, it wasn't up massively. On a technical basis, there's a gap fill at 88 and change. If we go back to the intraday chart, you can see it almost got there in the pre-market or after hours yesterday. Didn't. That would be my one level today that I would keep an eye on for maybe a day trade. Only at that point would I short. Gap fill is huge. The stock would be at new highs from after hours. There should be some distribution or selling pressure right in there. All right, what else are we looking at here? So anything oil related, I have a swing trade short that I'm in on FedEx with Smart Money Stocks members in the live portfolio. I'm looking to probably exit this today as it falls. The concept here is I don't believe that it's going to go back up a lot. But again, if oil is getting toppy, and oil starts coming in, then FedEx probably bounces, then I can reshort. So right here at 365, I think we're in the money about 5,000 on that trade, maybe a little bit more, in fact. And at some point, I'll take that money, bank it, and then we'll look for a retrace on that situation, or and that's one. Now, one other in terms of like someone's asking me, okay, what would I look to buy? Like what out there is to buy. So obviously we talked about Delta, potentially UAL for a day trade. I mean, those are potential buys. Same thing if oil pulls back next week, then those bounce. Just a, this happens, then that happens type scenario. Also the technicals align. One of the other ones I'd be keeping an eye on is there's a few of the nuclear power plays that have been beaten down. For instance, SMR. Let's look at SMR here. This one, because oil is so high, this will ultimately potentially make some of these ones like NuScale Power Corporation. It's been beaten down, but I could see maybe a level around $10.30 is a really good swing trade. Technically, it's a great level. And then also the idea is that it's just going to spur more investment in nuclear, right? Because we have to get off of these type of spikes in oil. And I think this is one of those ways to do it. And so the beaten down plays, I think, are key. I'm even keeping an eye on OKLO here. OKLO, I have this great down sloping trend line. If we were to come down to about 55 to 56, it looks fantastic for an opportunity. All right. Now, natural gas, guys, we talked about oil, but not natural gas. Let's look at that real quick. It is popping a little bit. I do not have a trade on in this, but I will keep you guys posted. To be honest, it would have to go up substantially for me to want to short it, considering what oil's doing. And then on the buy side, if it did get down towards this level here, I would be interested in a buy. Right now, it's trading up, so I'll monitor it. Let's go back to the S&P futures, which are continuing to get slammed. Watch this level on the S&P futures, the low from a couple days ago, right down here on the S&P SPX. That would be all the way down at 67.10. Watch that level for an intraday support level. If that breaks, watch out below. All right, guys. So listen, there's a lot going on here. Oil's pulling back a little bit here. We're back below $88 a barrel, back to $87.40. But again, this is a headline-driven market. The economic picture is souring. The inflation picture is increasing. These are not a good combination. You throw in what I just talked about with Western Alliance Bancorp. If we start to see more of that, then Oracle block laying off thousands of people because of AI. It's a recipe for really not good stuff here. I hope the markets can withstand it. I hope there's enough buyers out there, but certainly not me. Not right now, unless it's specific plays for a short-term swing that is always my members get with the live portfolio view. All right. Have a great rest of your day, guys. Thank you so much. I got to get to my trading room. Hope to see some of you there. Have a good one. Take care and be safe.